Welcome to another stage analysis video. It's Wednesday the 28th of June 2023, and this week's midweek video is going to be a group focus on the software group, which I've covered a number of times over the course of its move from stage 1 through into stage 2. The last time I did a video, I think was back in early May. I think it was about the 10th of May was the last one that I did, when it was a little bit further back around this kind of area here. So it's obviously had a good move since then, and April, following the stage 2 breakout back in February when it was still in stage 1, and all the way back in October, I did a group focus on it where it was the index charts itself as software index and the IGV, for example, which I'll show in a minute, were both obviously making lower lows and making stage 4 continuation breakdowns. But there was many software stocks at the time showing up in the watch list scans that I do for the members. So obviously the group chart can tend to lag a bit with what's going on. So the watch list is the key when we're looking for group themes of the change of relative strength as we start to see stocks move through stage 1 and then out into early stage 2 and beyond. So at that point back in October, in the later part of October, there was lots and lots of software stocks showing up in the watch list scan, so developing stage 1 structures while the index chart itself was still moving lower in stage 4. So obviously gave us a clue that it was potentially starting to develop stage 1 characteristics, and then obviously followed through as we move through the year. So I thought today it'd be good to do another video on the software group as it once again starts to consolidate after a decent move over the last month or so. I've had a few 3 or 4 weeks now where it's generally gone sideways. A little bit of a thrust 3 weeks ago, but has pulled back a little bit since then, back towards its rising 10-week moving average here. So if I flick through to the ETF chart of the group, which is very similar to the index chart there, you see it lags a little bit compared to that. It doesn't perform quite the same, obviously, based on its makeup. So if we look at the holdings of this, for example, this is the IGV. This is one of the ETFs that you can use to trade the software group. There's no perfect ETF as such. There's a bunch of different ones that you can try, but the IGV is one of the major ones. You can see the top 10 holdings of this make up about, I think, about 58% or so, I believe, from the quick calculation I just did. So with Adobe currently being the top holding, which itself has recently started to move higher in early stage 2, Oracle being the second biggest holding at 8.71%, which has been in stage 2 for a while, and Microsoft at 8.4%, which also has been in a strong stage 2 uptrend for a while now. So Intuit, on the other hand, which is its fifth largest holding there at 6.19%, is still struggling to break out into stage 2. It's right around the stage 2 level. So we'll review those in a little bit. So we go back to the individual group charts here with the ETF IGV. You can see the stage 2 breakout point back here, all the way back in January. So 23rd of January week there I've got on this chart. So as I said, the ETF charts themselves and the index charts are not always the best way to do the group measures. Like, you want to be using the market breadth, the percentage of stocks above the various moving averages in the groups, the bullish percent scores from the groups. You want to look at the stocks developing, how many are developing in stage 1 and stage 2, what Stan calls his survey, like his stage analysis survey. So we look at those on a group basis, so you can see obviously if the majority of stocks are developing in stage 1 basis and you've got some early stocks moving out into stage 2, then it gives you a clue that you could potentially see a broader group move and see more follow through. And then the ETF, as I said, which obviously being an average of the stocks within the group and having a different makeup depending on what ETF you're looking at, obviously will lag a bit, and so you might not necessarily get the exact stage 2 point. But in this case, fairly similar to what we saw in the index around this kind of area here. I've marked the higher level on this one as the stage 2 breakout, but on the ETF chart it's actually an earlier level here. So like I said, there can be differences, but doesn't really matter too much whether this is all stage 1 or across all of here, or whether this is stage 2, whether this is stage 2. All that matters is this is in the method, this is all actionable type of area for us. We're looking for the later part of stage 1 into the earlier part of stage 2 in order for obviously in the investor method side of it. With the trader method, we're looking more for continuation breakouts. So these kind of move where you've got bases where you're starting to make continuation moves, then potentially new bases here, look for continuation moves, or obviously pullbacks into the moving averages, into the reaccumulation structures at the lower end of the structures where you get the equivalent Wyckoff springs, etc. So on the daily chart here at the moment, we've got drawn this out to a full year. I normally only show 9 months on the chart, but before we give a little bit more context on this one, you can see obviously the move out of the lower base structure in there. This was the smaller part of the structure. There was actually a broader structure starting back May to June time through here, which, like I said, started to undercut at this point through here. So this secondary lower shakeout structure through here then became the key levels. We had multiple levels tested. You see it started to break out back and start and get back above that 200-day moving average and moving potentially out into early stage 2 through this area. But like I said, on the major index chart, it was more this kind of area up here. So either or doesn't really matter. It's just that all of this kind of zone is interesting to us in terms of the stage analysis method. At this point now, we're a little bit extended and starting to potentially show signs of developing a new base structure, developing what we would call phase A of a new potential reaccumulation base. So we always assume that it's a reaccumulation base when you're in stage 2 initially, unless we start to see signs of distribution. So at the moment, so you mark it up, you've got a short-term buying climax, you've got an automatic reaction. So we're looking for a secondary test to complete the phase A of this. So secondary test, how high that goes, whether it makes a higher high, test that, or how weak it is, will give you clues on how the base structure might develop, or whether the base structure will develop at all. If it's very weak and it rolls over, so for example the secondary test started to roll over here and then we started to make a lower low here, then base structure is not going to develop at all. That's just more of an ABC pullback. But if the base structure is going to develop with the buying climax, automatic rally, some kind of secondary test, and then start to build out some kind of structure, whether it has a spring, classic Wyckoff type structure, or whether it's a more of a VCP, stronger relatively, or even with that, you can sometimes get a shakeout into a spring a lot of the time with those, as people obviously get drawn into the VCP pattern, but it doesn't always play out as such, as the market likes to shake out some of the more obvious patterns at times. So at the moment, as I said, just early in a basing structure here. We've been in a short-term uptrend here. So what determines a short-term uptrend in a stock or an ETF, etc., is when it's above the plus 1 ATR level here. So the plus 1 ATR level is just 1 ATR from the 21-day exponential moving average here, which is the 1 month moving average, basically. If there's 252 trading days in a year, so we divide that by 12, you get 21. So 1 month moving average. So when we're in a short-term uptrend is when we're above that level. So at the moment, as you can see, we've been above that level for the majority of the last 2 months here, but we're starting to show a little bit of a change of behavior. So the previous moves below it only lasted a day, whereas we've had obviously multiple days below it, and now starting to attempt to move back above it, but hasn't quite got there yet. So if it can't recapture this, then it would suggest that we're starting to form some kind of sideways action, forming a base structure, or obviously rolling over. And if it does roll over, then obviously we've got the 50-day moving average a little bit further down here for a potential test. So let's move on into some of the individual stocks. So what I've done with this, it's a big group software. So over the course of the last group focus that I've been doing, I've been tracking a number of stocks from the group, from the stronger stocks that have had stage 2 breakouts and some that are closer to moving into stage 2, etc. And so I've added a few more today. I think, like I said, the software group's quite big. There's up to around 400 stocks in this group. So I think I've got about 50 or so in this that I wanted to run through. I'm not going to go through all of them individually in detail, but I will go through some of the stronger names at the start, and then we'll skim through some of the other ones a little bit. So starting off with AI, has moved back to the top of the RS rankings here, 99.7 SCTR score. So I've highlighted it again on the watch list yesterday for the third time this year. So if we look at this on the weekly chart here, you can see the zoom in on this a little bit. The initial stage 2 breakout was a very difficult stage 2 breakout in terms of it had a double bottom type pattern move. It started to move up, then had a very short pivot and went straight into stage 2. There was no real stage 1. Stage 1 lasted for basically a week in terms of that. If you count this as the point where stage 1 started up here and then obviously started to draw your structure, and we had the shakeout move. So we had a stage 4 continuation, and then it returned back into the base structure. So if we drop in on the daily chart here, you can see this point here. So we had a big move up on the day. The previous day before that, I think it was like the 30th of January time, no, 27th of January there. And then the following day, it dipped back over 10% in a day before then reversing back. So this defined our first pivot above the 200-day moving average. Generally defines your stage 2 levels. This defined that. We had a more than 10% pullback and then flipped reversed and then back through. So there's your potential stage 2 breakout level. So like I said, even though you haven't really got a stage 1 structure, you've got a base structure that's been a declining structure during stage 4 that's then suddenly been thrust out on this exceptional volume as it moved higher. So it did form an intraday distributional pattern through here. I've talked about this many times on the Twitter feed over the course of that through February, March and April. So you can see the classic buying climax, automatic rally, secondary tests, some further testing through here, up thrust, and then obviously your UTAD and significant reversal bar back into the range. Last point of supply, and then started to roll over and break back down again. So completed its distributional structure, came back down to the 200-day moving average, and then tightened up again. So at this point through here, I did highlight it back again in the watch list as it was holding around the 200-day moving average. Volume had tailed off dramatically at that point. You can see back at the original point I highlighted it in the watch list. I think it was what was the date on that? The 19th of January there. So it was that was when it was still in stage 4B minus at that point. So it went from stage 4B minus quickly through here. So highlighted on the pullback in stage 4B minus. Then it rallied obviously exceptionally strongly into stage 2. And then again, obviously had that distributional structure and pulled out, and then had this tight action around that 200-day moving average. So again, had a secondary move, almost 200% again. So you can see we had a 200+% move for the first rally there, then another 200% move. So momentum has not waned in this one yet. It's been a big day trader favorite and swing trader favorite. People have been all over this one. They can see that exceptional increases in the volume that this has had since compared to what it was doing back in stage 4. So it's got a lot of interest since ChatGPT came out. Obviously nothing to do with ChatGPT, just to do with the AI theme itself. But again, this is now starting to make another structure after this, another 200% move here. So we've got a buying climax, automatic rally, secondary test, and up thrust. Now we've got a little bit of a higher low developing here. So I highlighted it again in the watch list yesterday. So obviously we've got at the bottom end of this range, and it's a big range again. So again, if it's as it been a favorite for the momentum traders and the day traders, etc., this obviously could potentially push back towards the upper end of the range at the moment, which is from yesterday's point still had a 47% range as such. So potential for short-term swing trade maybe in that. If it doesn't roll over here, it starts to roll here and weakens and gets back below this level, then obviously it could form a little bit of a double top and roll. But if it can push, then obviously it's got a lot of range there to the top, and the fact that it's in a strongest RS stock in stage 2 at the moment, it has got this significant reversal bar on the weekly, which we can see previous significant reversal bars, some broke down, some didn't. But this one, if it can hold here, hold this obviously resistance zone support, resistance turn support, then basically we could see a pushback towards the top of the range as yet another base structure develops. Obviously not expecting higher highs in the near term because this significant bar obviously going to hold it up for a little while here, but if it can recover at least half of that, then obviously would be a sign of strength. But if it does it does stay below that then that could obviously indicate further weakness to come. But at the moment, obviously looking like it could move in the near term.